Welcome to TMS Insights, the February edition. Ben Clark and Jeremy Hook bring this one to you. It's been a busy month with the reporting season, and it's been a very good month for the market with a rise of about 4.8% as at today. So let's get into what has been a very busy time to bring you some of the news of the bigger stocks, Ben. I guess on a sector basis initially, some real turnarounds in sectors like the funds management industry.
Yeah, and look, I think we were a little wary coming into reporting season because share prices have been pretty strong over that Christmas period, and the market was factoring in a decent amount of earnings growth that we haven't really seen delivered in sort of over the last few years. But it's been really good to see a number of areas of the market delivering better than expected earnings growth, which is leading to a lot of price upgrades.
Yeah.
Wealth management, certainly a highlight. Stocks like so Platinum in particular have been very good. That along with I think the resource sector's been a big part because
big turnaround there, yeah.
Big drag on the index as a whole. We know that BHP and Rio make up about 13-14% of our market, and if they're not sort of going up, then it's hard for the index to go up.
Yep.
Both those results were ahead of expectations, and despite a sort of weaker commodity price environment, they're actually growing their profits at higher rates because they're doing the right things at a company level.
Yeah.
So a bit more comfort there in those stocks as well.
And a little bit of a glimmer of hope for the building material sector, which has been pretty poor for a while.
Been really bad. I mean, this is a highly cyclical area of the market. It can have terrible times. It can have euphoric times. Yeah. And we've seen a great result from Boral.
That was good. Yeah.
I think we'll see a good one from Brickworks coming up, and Dulux, stocks like CSR, James Hardie are all on a tear.
Have been rallying, haven't they?
They've been very strong.
So at last, it's a bit of a turnaround. So interesting sectors, but let's get into a few of the stocks that we've talked about and have liked, and see how they've gone. Look, a cracking result, and probably the one that was most appealing. One we followed for a couple of years now in this season was Seek. Yeah. Great result.
Unbelievable. I mean, the growth in the business is actually accelerating. And so, they grew their earnings by 40-odd%. The dividend was up 40%. The company is just going beautifully.
And mainly in the international division?
Yeah, in the international division, although in a very tough employment market locally, they did well to just have pretty flat earnings there.
Yeah.
And the education business is doing well. So, I think they announced the acquisition of JobStreet, taking up to a 75% weighting, and more than half of Seek earnings will now be coming from Asia.
Yeah.
So they're truly building a global business with I think about 2.5 billion people in their core markets in which they've got the number 1 or number 2 job websites. So there's a lot further to go. A lot
further to go. So really good share price reaction, but again, very much a stock we like, an Asian-facing industrial business. So really well done to Seek. Another business which occupies a similar space, certainly in investors' minds, and certainly one we talked about only 1 month ago.
Yep.
Carsales.
Yep.
Great result.
Yep, great result. And I think it was the market was positioning the share price for a poor result, and the result came in a bit ahead of forecast. This is one we were sort of recommended a month ago, as you said, on the video diary. And look, I think the company's done a great job at continuing to grow sales. It's also heading offshore as Seek has done, although it's a lot earlier in that sort of in that mode with the acquisition of iCar Asia, 20% stake in that,
and their Mexico business
and Brazil. Look, Carsales still looks very good to us. 60% return on equity, and nearly an $11 share price now. So it's had a very good jump up in a pretty short period of time.
Yep, no, that's an excellent one. A big one that a lot of people hold, and the only bank that reports in the February reporting season was the mighty Commonwealth Bank, and that was a great set of numbers again.
Unbelievable. There was not one number I think that anyone could criticise. The bank is just going along absolutely beautifully. It does trade on a premium PE to its peers in the other 3 banks, but each time you see it report, you can sort of understand, I think, why it does. Right. I think we both agree that the banks probably look pretty fair value at the moment.
I would think so, yeah.
But the businesses are performing well, and they're finding ways, particularly on the technology side of the businesses, to keep growing some earnings momentum. They should have a reasonable year, I think. Not probably the year that they had last year in 2013, but still paying nice dividends and a bit of capital growth hopefully on top. And CSL, Jez, was another one that did very well.
And this is an interesting one because the result was solid. It wasn't the top line growth that you expect. There are currency impacts that come to play. But CSL actually went down after its result. We thought it was a very good result. And again, reinforces the quality of this business. Remembering it's got the most robust balance sheet in the biotech space of any. It fully expenses all R&D. It's a very conservative accounting treatment, and it does have genuine business growth avenues, which I believe are unexplored. So CSL actually, and the point here for investors generally is the role of expectations. It went down initially, it's actually recovered somewhat, but CSL with a high market rating, well liked in the market, well owned, I guess, the result itself probably had to do something quite over the top to get a positive market reaction, but they're the companies we look for, and we think actually that one is worth adding to at the moment.
Yeah, I mean, it has been interesting in that I think there's a lot of good quality stocks out there that we're used to seeing good news from, and it's almost if you don't get great news, the share price sort of can be a bit flat or even low. I think even with Commonwealth Bank it was pretty flat when it reported its result.
True.
But another feature of this reporting season has been there's a lot of very poor performing businesses that have come out with results that weren't as bad as they could have been. And we've seen some quite amazing share price moves on the back of that, which can sort of confound you sometimes. But overall, coming out of earnings season, you'd have to say we're pretty optimistic.
Well, that's right. I mean, the thing is everybody looks at the market and applies concerns about unknowns. The knowns are the black ink of the reporting season, and you can't argue with the Australian reporting calendar. It's played out very nicely in this season, and that sets up the background to 2014 and how we look. So as we end both the February reporting season and this TMS Insights, it's on a good note, and we look to bring you next month's hopefully on a similar tone.